The announcement of the increase in the monetary policy rate by 150 points from 28% in January 2023 to 29.5% in March 2023 came at the end of the 111th Monetary Policy Committee meetings. The rate, which is of keen interest to businesses, does not only signal the rate at which the central bank will lend to commercial banks, it also subsequently influences average lending rate on loans to individuals and businesses. Cumulatively, the policy rate hikes by the central bank since November last year comes to some 1,400 basis points. In his address to the media, Governor of the Central Bank, Dr. Ernest Addison, noted that there are still concerns about the inflation rate, hence the need to increase the policy rate. The increase in the policy rate means the cost of credit will continue to remain high, affecting household spending and private sector growth. Already, average lending rates shot up marginally to 36.64% in February 2023 from 35.58% recorded in December 2022. Per data from the latest Bank of Ghana's Summary of Economic and Financial Data for 2023, this is equivalent to 3.02% interest rate on loans per month. Reacting to the hike in the rate, economist Dr. Patrick Esumi expressed surprise at the BOG's decision.
There is certainly more to be done to fight the inflation because even though we've seen marginal decline, the inflation is still way higher than what is in the medium-term target. So I would have expected that once we've seen that the previous round of increase are beginning to kick in, we should probably hold on a little bit. So yeah, what he's saying might be true, but it's still a little bit surprising. Don't forget that there are two risks they are trying to balance. There's the growth risk and there's the inflation risk. Obviously, the MPC has played more weight on the inflation than the growth, which is a little troubling. So I think I still find it extremely surprising, regardless of the explanation given. Clearly, it seems to me that they are throwing the concerns of businesses under the bus and focusing more on fighting the inflation. I don't think that's a good balance. I don't think it's a balanced way of using the monetary policy. I think, yes, the inflation is high, but we have to look at what else, what all the previous increments have done. Interest costs have gone up a little bit substantially. And then we also have to consider that, business sentiment has waned. The composite index of economic activity has seen negative growth for several months in a row. So I would have expected that at the very least they would have held on.
On the securing of the IMF deal, Dr. Ernest Addison further warned of dire consequences if the new taxes before Parliament are not passed. This comes as Parliament is expected to vote on the Income Tax Amendment Bill, Excise Duty and Excise Tax Stamp Amendment Bills, as well as the Growth and Sustainability Levy Bill.
It is imperative that Parliament prioritizes the passage of the revenue bills currently before it. Under the staff level agreement with the IMF, the Bank of Ghana and the Ministry of Finance have finalized a memorandum of understanding on zero financing to the budget, which will be signed shortly. The passage of the relevant revenue bills by Parliament will therefore conclude the required prior actions to advance Ghana's program to the IMF Executive Board. This will be critical in resetting the economy on the path of recovery, including putting it firmly on a disinflation path and sustained growth.